This is Business Report Nigeria, brought to you by your digital first Pan-African News Network, TOS Television. I am Ruwa Penawa. The Central Bank of Nigeria, CBN, and the Nigerian Communications Commission, NCC, have slashed the unstructured supplementary service data USSD charges being paid by bank customers from 50 naira to 6 naira 98 kobo. The new charge commenced on Wednesday, March 16th, and it would now be collected by banks. Previously, customers using USSD are charged between 20 naira and 50 naira per transaction. This agreement was reached at a meeting chaired by the Minister for Communications and Digital Economy, Issa Pantami, to resolve disputes and ensure uninterrupted services to customers on the USSD channel. This gives room for a much cheaper average cost for customers to enhance financial inclusion, and the new USSD charges will be collected on behalf of MNOs directly from customers' banks' accounts, and banks, on the other hand, cannot impose additional charges on customers for use of the USSD channel. The National Bureau of Statistics said on Tuesday, March 16th, that Nigeria's inflation rate rose to 17.33% in February 2021. This is the highest inflation rate in 4 years, and it is linked with the food blockade experience, which led to a sharp rise in the prices of beef, foodstuff, and vegetables. Now, according to analysts, the blockade would worsen Nigeria's food inflation. On a month-on-month basis, the headline index increase in February is 0.05% rate higher than the rate recorded in January 2021. The urban inflation rate increased by 17.90% year-on-year in February 2021 from January 17.03%, and the rural inflation rate increased by 16.77% in February 2021 from January's 15.92%. On Wednesday, March 16th, the House of Representatives urged telecommunication operators in the country to stop the planned withdrawal and suspension of USSD services to the Nigerian banks and other financial institutions. The House also made it mandatory for the Committee on Telecommunications to liaise with the telecommunications operators, Nigerian Communications Commission, NCC, Central Bank of Nigeria, CBN, and Nigeria banks and other financial institutions to resolve any problems and report back to the House within 6 weeks for further legislative action. The Nigerian Stock Exchange market capitalization has declined by 173 billion naira as investors await clarity on demutualization. Now, between Wednesday, March 10th and Monday, March 16th, the NSE capitalization has declined by 193 billion naira, falling from 20.369 trillion naira to 20.176 trillion naira. Some experts think the decline happened as a result of the wait and see attitude of investors who were keen on getting clarity concerning the next step the exchange would take. To help, the NSE would need to be more intentional about enlightening the public on the benefits of the demutualization. The Managing Director, HighCap Securities Limited, Mr. David Adonri, spoke on the demutualization, and I quote, "From today, the NSE has become a company which is driven by profit motive. Instead of ordinary and dealing members, it has shareholders now. Dealing members are now clients of the exchange. The NSE can henceforth exploit all avenues for raising capital instead of relying on the meager contributions of its members. It is a big transformation wherein the possibilities are endless." As confirmed by the Director Corporate Communications, CBN, Mr. Osita Nwasinobi, the Central Bank of Nigeria has engaged KPMG LLP as transaction advisor for the newly created Infrastructure Corporation of Nigeria Limited, Infracorp, after careful consideration of bids from other global professional services and management consultancy firms. President Muhammadu Buhari approved the launch of the 15 trillion naira company as part of efforts made to reposition the economy after the COVID-19 pandemic, as this initiative will be part of efforts to ensure the diversification of the economy. Infracorp is expected to grow to 15 trillion naira in assets and capital, serving as one of the premier infrastructure finance entities in Africa dedicated to Nigeria's infrastructure development. There's more coming up on Business Report Nigeria. I will be back after the short break. On Wednesday, March 16th, shareholders of Zenith Bank PLC approved the payment of proposed 94.19 billion naira dividend for the year ended December 31st, 2020. They commended the board and management of the bank for the dividend payment, which stood at 3 naira per share. Last year, an interim dividend of 0 naira 30 kobo was paid last, and a final dividend of 2 naira 70 kobo was recommended to be paid after approval by the shareholders. Zenith Bank PLC posted gross earnings of 696.5 billion naira, showing an increase, of 5% from 662.3 billion naira reported in the previous year. Now, even though returns on equity and assets reduced, non-interest income and profit before tax (PBT) increased as a result of a blend of growth in the top line and a significant reduction in interest expense. As of the fourth quarter of 2020, female unemployment rate in Nigeria increased to 35.2% from 31.6% recorded in the second quarter of 2020. Reports from the Nigerian Bureau of Statistics state that a total of 61.63 million women were in the working population, accounting for 50.5% of the total working population. However, only about 30.15 million of these women were willing and able to work, thus representing about 43.3% of the total labor force. So regardless of the relatively equal representation of the female gender in the working population, women accounted for just 43.3% in terms of labor force as against 47.7% for males, with the total number of unemployed females standing at 10.61 million. In the fourth quarter of 2020, Nigeria's crude oil production declined by 19.6% to an average of 1.52 million barrels per day, in comparison with the 1.89 million barrels per day recorded in the fourth quarter of 2019. Reports from the Central Bank of Nigeria revealed that of the 1.52 million barrels per day produced in the review period, an average of 1.07 was exported, while the balance was allocated for domestic consumption. This decline in production happened because of Nigeria's commitment to the OPEC production cuts agreement aimed at supporting the rebalancing of the crude oil markets. The macroeconomic instability linked to the COVID-19 pandemic and other structural factors continue to weaken the near-term outlook for the Nigerian economy. Experts are optimistic as they predict that by the first quarter of 2021, the economy would be more resilient as a result of continuous monetary and fiscal policies interventions, including the judicious execution of the stimulus package of 2.3 trillion naira and the likely rollout of the COVID-19 vaccine. The Senate Committee on Aviation has indicated interest in converting the Nigerian College of Aviation Technology Zaria into the African International University of Aviation. Senator Smart Adeyemi, Chairman, Senate Committee on Aviation, recommended that the sophisticated equipment and aircraft maintenance facility coupled with the infrastructural development in the college can better be used for university training of students in the aviation industry. He was impressed with the high level of maintenance culture by the management of the institute and applauded the leadership of the college, stating that the committee will go back and look at the aviation bill to see how to upgrade the college to a full-fledged university, as presently the bill has passed second reading. Through its subsidiary Transit Gas Nigeria Limited (TGNL) and the Nigerian Gas Marketing Company Limited (NGMC), Accela Limited has commissioned an 18-kilometer gas pipeline system in Ogun State. It runs from Ibefun to Wright Foods Limited factory in Ososa. Bolaji Osunsoya, Chief Executive Officer of Accela, said, and I quote, "This venture is in firm alignment with our near to long-term market expansion strategy and emphasizes our push to broaden our asset portfolio and strengthen our market play within the gas sector." Now, as part of the NGMC strategy, pioneering and implementing initiatives with private players is a clear indication of their willingness to collaborate and ensure the success of Nigeria's gas expansion program. You are still watching Business Report Nigeria. There's still more coming up, and I will be back after the short break. Dr. Oji Ogbanaya, the new Executive Secretary of the Nigerian Extractive Industries Transparency Initiative (NEITI), has vowed to recover 69.51 billion naira and $5.31 billion as taxes from oil companies. This is more than 2.07 trillion naira. He said, and I quote, "The current NEITI management under my leadership is already evolving policies and strategies that would ensure that the recommendations in our reports are followed through and statutory recoverable revenues due to government, which is put at 69.51 billion naira and $5.31 billion respectively, are recovered into government coffers. These recoverable revenues consist of payments on gas royalty, oil royalty, gas flare penalties, company income tax, petroleum profit tax, withholding tax, education tax, value-added tax, and NNDC levy." The agency plans to work with others to recover the revenues, even as NEITI will unveil a framework that will involve stakeholders in the process. The Federal Airports Authority of Nigeria, FAAN, has shut down temporarily the e-finger departure screening point at the Murtala Mohammed International Airport, MMIA, Lagos, as part of its maintenance and upgrade program. Mrs. Henrietta Yakubu, spokesperson of FAAN, stated that the closure would enable the authority to carry out some routine maintenance on the screening machines. In her words, consequently, all human and cargo movement have been temporarily diverted to the D-finger screening area until the maintenance and upgrade are completed. The authority has appealed to passengers and airport users to bear with it at this time. The Federal Inland Revenue Service, FIRS, has insisted it is still in charge of stake duty collection. Abdullahi Ismaila Ahmad, the Director of Communications and Liaison of the service, said in a statement, and I quote, "For the avoidance of confusion arising from such publications, the FIRS hereby informs the general public, especially taxpayers, that the minister was misquoted as saying that the administration of stamp duty was granted to the NIPOS by the Finance Act 2020. To clarify, the minister merely stated that NIPOS would henceforth, produce the adhesive stamps required by the FIRS to denote stamp duties in line with Section 2 of the Stamp Duties Act as amended by Section 46 of the Finance Act 2020. And to wrap this up, economic experts are intentional about the Central Bank of Nigeria putting measures to regulate cryptocurrency transactions in the country. According to senior economists with Nigerian Economic Summit Group, Wilson Erumebo, we should have an open mind towards cryptocurrency and not just assume that it is just used for fraudulent activities, because there are lots of legitimate people who are into cryptocurrency, and rather than just banning it, we should take our time to study it very well and create a kind of regulation around it. The world is evolving and Nigeria cannot be left behind. As more investors take interest in the cryptocurrency market, job opportunities have continued to grow on a yearly basis, so it is appropriate to regulate the industry, as companies like Binance, Bundle, and Quidax have introduced programs that help them deepen their knowledge of the market and become professionals. And on that note, we end Business Report Nigeria. Thank you for watching. Do follow us on social media at TOS TV Network on Facebook, Instagram, and Twitter. Like and subscribe to our YouTube channel at TOS TV Network. I am Ruo Penao. Thank you for watching.